Meta stock is one of the best opportunities at the moment in the stock market, and currently it's on sale, 20% off of all-time highs. We are going through together the reasons why Meta has sold off so strongly in the past month, as well as doing a price prediction for the stock and to see what opportunities we have as investors. Let's begin with the recent earnings report that came out last week and why we've seen such weakness in the stock. Meta had a once-off non-cash expense of $16 billion. Now, what does that actually mean? Due to the tax reform that went through with Trump's big beautiful bill, Meta had billions of dollars of expenses and losses from the past. They can kind of save that up in a way and have that as an asset in order to deduct against profits in the future. However, due to the changes to the tax laws, Meta lost $16 billion of those deferred taxes. At face value, that's around 80% of Meta's profit from the quarter just gone in an instant. But the good news is this is not going to affect Meta in the future. And if anything, in the long run, Meta's tax rate is going to be lower, hovering around 13 to 14% without relying on these deferred taxes. If we were to ignore this tax loss, Meta did a very good job of the quarter. The fundamentals of the business are looking quite strong, and the profit would have grown 17% year over year. All of that news is basically a non-factor in terms of looking into the future. And I think most investors were willing to overlook this once-off charge. The areas that we had concern for are to do with the cost and expenses. For example, general and administrative costs went up 88% compared to last year. Marketing and sales was flat, which is good, but we saw research and development, not much of a surprise, that was up 35.5%. All of this investment into AI and into this future technology is starting to really cut into the profit margin, and that's why all of a sudden our income from operations for Meta only grew 18.4%, whereas it should have grown somewhere around 30%. And that brings us to addressing the future of Meta. How are we as analysts or investors meant to price in higher expenses, but then we also have the fundamentals of the business doing quite well? Now, I do see this as an opportunity similar to Google about 6 months ago. A lot of people were scared of Google, sold off the company. ChatGPT was going to eat all of Google's lunch, but the fundamentals of the business were positive. The valuation was too low, and then Google managed to grow around 90% in share price in just 6 months. Meta has sold off pretty aggressively in the short term, and I think it's going to beat profit expectations over the next year, and we start to see that really strong aggressive move higher in stock price when we put in those little ingredients. I am going to give some evidence to support my arguments here, and the first one here is a cumulative growth chart of the revenue and expenses at Meta. So this chart is showing us the total change from the start of 2021. So we see here that often we have a flat area of growth in revenue and expenses. So basically the company doesn't want to spend too much money when the fundamentals of the business are just not growing. However, in the last couple years, we've seen an acceleration in growth, roughly 20% in revenue, but also expenses at the same time. But there is one huge positive that I don't think many people have priced in, and that is the effect of putting ads on WhatsApp pretty much for the first time. WhatsApp is a messaging service primarily used throughout Asia, Europe, and the Middle East. There are currently around 100 million active monthly users of WhatsApp in America, but the biggest users are in Asia with 600 million alone in India. This is potentially the biggest gold mine that has not been tapped yet and probably beats any other business on the planet. The total user base of WhatsApp is around 3 billion people, and if we could see the same type of monetization as Facebook or Instagram, they pretty much just need to copy and paste those models and implement it, put ads in front of 3 billion people, and this is a huge profit maker. Alone, that could add somewhere between 30 to 50% total revenue growth to the total company over the next couple years. So far, the plan for WhatsApp is they're going to put ads very similar to what we see already with Facebook and Instagram in the status area. Status area is kind of where you go to see brands or people you follow. They can post text or pictures, posts, same as Instagram. However, ads are going to get shown in that area. Ads will probably cost businesses like 3 cents per eyeball. Also, there's a smart idea here, kind of similar to YouTube. They're going to offer paid subscriptions where you can pay to subscribe to, let's say your favorite YouTuber, he has a WhatsApp. You can pay maybe a couple dollars every month and you get specialized messages that are exclusive to you. Maybe it's special posts, maybe it's quick text updates. There's maybe Discord that kind of competes in that area, but this could be a huge monopoly for WhatsApp. Total market share of WhatsApp is probably revenue at about $100 billion a year, a huge amount. That's the maximum potential. But the question is, well, how fast can they grow to making that much revenue? So we can look at stories such as the Instagram revenue ramp that we saw from 2016 all the way through to really 2021. Instagram went from making a couple $1 billion in revenue per year. 4 years later, they were making around $50 billion a year. And I'm going to pose here that WhatsApp is going to ramp much quicker. Instagram had to work out the coding and the way it was going to deliver ads to people for pretty much the first time. However, WhatsApp, they're going to pretty much copy the model. They've already got the user data, they've got the software, they've got the people in-house that know how to deliver these advertisements, but also you have AI that is making the system much more efficient. So in terms of the revenue growth, we have $169 billion at the moment for a 4-quarter period. If we compound that at 26% year over year for 3 years, that is roughly taking into account 6% growth from WhatsApp alone, 20% from the core business. Then if we see that happen, maybe we could keep expenses under control at only about 20% growth per year, where really that difference in revenue versus growth in expenses is coming from WhatsApp. Crunching the numbers and assuming no change in shares outstanding, then we have around 30% growth per year in EPS or profits per share, and that means a doubling in profit over the next 3 years. And if we apply this to the price chart of Meta, over the next 3 years, doubling in EPS, and if we have a forward P ratio around 25 applied to $53 of EPS, that gives us a price target by the end of 2027 of $1,322 a share. Now, the reason why we're only looking 2 years ahead is because we're using a forward P ratio. We have a look at the profits 1 year ahead. So that means in the next 2 years, Meta stock could actually double. This does depend on WhatsApp finally getting monetized and being profitable. So there's a lot of ifs here, but this is my personal base case. And the potential negative of not reaching this prediction, personally, the biggest risk is just the economy. If we do see a slight recession on the horizon, then all of a sudden Wall Street is going to really punish companies that are spending a lot of money. And yes, that does include Meta. And the forward P ratio of Meta went down to as low as a 12 or a 15 back in 2022. Under these similar conditions, a lot of expenses and then a not very good economy, and that would pretty much put us at a standstill for the next 2 years. This is the reasoning why I've made Meta my biggest position in my growth on sale portfolio. So I try to buy up companies that have strong growth ahead of them, good fundamentals, but have gone through a bit of a sale. If you did like this video looking at single company names, but also just investing in general, make sure you subscribe to the channel. I've got 2 more videos for you to watch here next. I'll see you guys next time. Bye.